good afternoon, and welcome everyone to the Beginners Online Trading webinar. My name is Danny, and I will give you the webinar today. First of all, I will explain how the webinar is going to happen, and then we can hit the road. The first part will be more of an introduction to the facilities that we have here, okay, on the WebTrader. This interface is not something that you have to download or install. It's something that you're supposed to see as soon as you are logging into the website with your email and password. Okay, I will speak about it more comprehensively as we go, but right now, just as part of the introduction. The second part will be more practical. Okay, we'll dive in to understand what does that mean, buy and sell, and some things here. As you can see, there are some boxes, okay, which can help us along the journey. We're going to speak about that as well. And lastly, hopefully, if we'll have additional time, perhaps we can have a nutshell on analysis. Okay, and it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice or recommendation or suggestion. Okay, so this webinar is recorded, guys. So even if you've missed a part or you want to recap it in your own speed, you can just review it on our channel on YouTube. Okay, hopefully it will be later on today, but no guarantees. Even though it's called as a beginner online trading webinar, we're going to acquire some necessary tools for intermediate and advanced traders as well. Okay, so like I said, we're going to open with an introduction. So AvaTrade, as you know, we are a regulated company. We exist since 2006. We have 9 licenses worldwide. If you have any kind of questions or query, our customer service is right here at the bottom left. Okay, as you can see, you can chat with us. You can use the WhatsApp function, whatever you prefer. And as I said before, to get to here, you just log in with your email and password. However, if you can't see this interface, okay, so you can send an email to cs@avatrade.com and they can apply it on your account. Okay, either the customer service or a senior account manager. Now, a senior account manager can also help you with the trading side, okay? So customer service can give you support to customer service, and a senior account manager can assist you with all the things under the trading umbrella, which can be a trading plan, a strategy, calculations, some things we're going to see here today, okay, to assist you to understand any even things that I'm going to explain about today. Your account manager can take it further and explain it to you in a private lesson. Okay. And of course, if you haven't received a senior account manager, you can check it with the customer service for somebody to be assigned, and then he's supposed to contact you, depend on your eligibility. Okay, now let's carry on with the WebTrader. Okay, this is the majority, well, we're gonna have the whole webinar today on the WebTrader. Okay, I'm just gonna jot it down right here. And underneath, we're gonna have the regular, well, the conservative platforms, okay, which are also great, the MT4 and MT5. And underneath, we're gonna add here the AVA Social and the AVA Options. Okay, now AVA Social, I'm gonna speak about it a bit more. AVA Options, it's not really the same type of context that we are trading here. Okay, this is a similar concept. This is a different concept, contract for a difference, which are leveraged trading, and they have a different destiny than options. With options, you can rebuy or resell, and I don't really want to get into that to waste time on that, but I will give a few words about how the app is built, and I can tell you that the AVA Options, the app itself, lets you see predictions, and to maneuver with it is very, very smoothly. So if you plan to trade options, if you ever consider that, I highly recommend you to check AVA Options, as this is a remarkable app to try. Ava social, Ava options. The last thing that I was referring to was Ava options, obviously. Even though Ava social is amazing as well, and I will explain to you why. So when you download Ava social, you have two main functions that you can use, which are follow and copy. Now, what does that mean? Let's suppose that I'm a new, even if I'm not new, okay, but for beginners, as this is a webinar for beginners, it's even more efficient, and I'll explain to you why. If I still don't have a strategy, or I'm still making adjustment to my strategy, and I would want to have an idea how a successful strategy look like, I can just download the app, and I have lists of clients which I can follow or copy. What does that mean? If I'm following someone, I'm going to get the information from his trades, and it's up to me to either execute it or not. Okay, I'm going to get notifications or messages with my trader's position, and I can just either follow the same guidelines, or maybe keep it in my sheets and then perhaps use it to upgrade my own strategy. Okay, that's to follow. To copy, it's the exact same process, but the positions will be launched automatically as well, okay, without me doing anything. It's just going to launch the position similarly to the person that I'm copying, okay, and I can adjust the proportions, the lot size, and some other things, which personally I find it very convenient. Also highly recommend you to download Ava Social, as it is very worth to try. Okay, now let's proceed. I'm just going to take that and I'm going to put it in the lower bit. Just a second. Okay, and we will carry on with the web trader as I've explained before. Let's just cover a few features that we have here. Okay, and what I'm going to show you now is not things that you can find on MT4 and MT5. Those things you can find only on the web trader or the AvaGo. Okay, and what we are going to see now is called Ava Protect. Now, Ava Protect, what it does, okay, first of all, to bring it up, why don't I see it? Because this is the default. Let me click it again. It might look like that as well. It doesn't really matter. You can always expand and minimize the chart, right? By clicking on the two tiny arrows to the upper right. And to open the Ava Protect, what I have to do, either this way or that way, it doesn't really make any difference, is to click on sell or buy. And then I have here this golden shield. As you can see, you see this golden shield. I can either click on the shield or I can click on the box here. And then it's going to let me choose the time. Okay, now I'd rather take something physical. Might be a little easier to comprehend while I'm explaining about the product. And maybe I should also put down a short description just to understand the purpose of this product and how to use it efficiently. So it lets you protect the position. You don't have to remember it. It's written here as well. But this is a different interpretation, so I'm just putting it simply in my own words. It lets you protect the position for a certain time frame, and whatever you lost during that coverage, you will get back. Okay, there is a fee when using the service. Now let's understand what does that mean exactly. First of all, what does that mean to get back what I've lost? But we're here to make money, right? So what is this to get back my losses? Well, of course, as much as I can make profits, I can also have loss. And this product, what it allows me to do is to gain back my losses. How does that work? Okay, this is very simple. So I'm going to click here on the shield. It's going to show me here, you see, it's exactly as it's written. It's going to let me choose the position for a certain time frame. Which time frame? The time frame that we choose. So I can just click here on the plus to expand. And I want you guys to notice what happens with the fee, right? You see that the fee now is 41. It's 1 hour, it's 41. Let's expand the time, you see? And the fee is getting bigger as well. Now for 2 days, we're paying much more. Okay, same apply with the lot size. Okay, so I can, let's begin with 0.01. And then when I expand the lot size, it also have an impact, of course, on the fee. Okay, so we understand that the time length and the lot size are the two things that has an impact on the fee. And they, of course, also have an impact of how much we can either make or lose. Okay, not the length, but the lot size. Now, when we are looking at this product, we're going to describe here two scenarios, which are very simple. They're going to make it very simple to understand. Perhaps I should rather use the, okay, I'm going to show you now how to use, just a second. Okay, I'd rather do it here and simulate the potential profit and loss using the take profit and stop loss. Oops, something just happened here. Okay. Okay, just a second. We're going to try and fix it. I think my wheel on my mouse just decided to suicide. Let's try another asset. Okay, because we need the lower bit, guys. We need the lower bit here, and it doesn't seem to cooperate. Oh, there we go. Was I on the right thing? Okay. Now, the take profit and the stop loss, they help us predict the potential profit or loss. Now, why did I insist on opening this and opening that? Because eventually we're paying a fee, right? We're paying a fee here. Just a second. We're paying a fee here that we don't want to end up using this product inefficiently. Because if my fee, let me just show you that quickly. Okay, let's suppose we cover it to 2 days. Okay, and then let's try. Oh, there we go. We're able to overcome the wheel. Okay, that's very good. Okay, so where were we? Right. So what about this fee? If I'm paying 126 to protect my position, okay, and then if I lose something, I get it back. What if I'm paying 126 and I lose 20? Would that make any sense? Absolutely not, right? Same apply with making only 20. Why am I using it in the first place, right? There is no, what's the point? So this helps me estimate. I'm going to explain in a minute what they are both doing, okay? The take profit and the stop loss, but I have to make sure that I'm going to explain to you in a minute what I did, okay? Don't worry. When I'm using the product, I need the product, if I'm using EverProtect, to be lower than my profit or loss. Otherwise, I'll end up paying a fee bigger than my profit and loss, which is, again, it makes the service futile, right? If I'm losing a 220 and I'm paying 126, that's not a bad bargain. It's not a bad bargain, okay? Because without using it, I would have just lose 220 and I wouldn't get back anything. Same apply with 220. That's not bad. Paying 126, getting 220, not bad. If it would have been like this or like that, as an example, what do you think about that comparison? Is that a position that I should take? But let me explain about the take profit and the stop loss so people here will understand what we are simulating with. So right now we are on a buy. Okay, presently we took a buy. Logically, when I'm taking a buy, that means that my intention is that the value will keep decreasing. Okay, when I'm buying something, then every unit that I sustain over, let's say from 234, $10 higher, let's do 234 to 230, 54, 23, 54. You see $10 up, $10 up. That means that I'm gonna make $10. Okay, see, I have here 1 unit. And then when I buy and it goes up, I make $10. What the take profit does is just it remembers the price that I want the position to be closed, and it closes it automatically. Okay, when you learn to use, this is called a pending order. Okay, and once you learn how to utilize with them, they're a huge time saver. Okay, same apply with the stop loss. Obviously, when I'm buying something, if my intention is that it will go higher, if it goes the other way around, I will have a loss. Okay, works exactly the same idea. If we decrease it from where it's at right now by 10, we will potentially lose 10. Okay, very, very simple. The concept here is super simple. So whatever protect allows me to do is to protect my position. Then when it goes negative, I'm going to get my losses back. And the comparison the comparison that I showed is the fee needs to make sense. Okay, the fee here needs to make sense. I'm gonna pay $12 to make 10, to make 8 or to lose 10, right? Does that make sense? Are we understanding this, guys? Is this? I think it's very simple, but I'm just making sure everybody understood that bit. Do we have any questions about that? Any questions, guys? Cameron, is this free to use? Yeah. Oh, well, look, it's free to be able to use Ava Protect. You don't have to pay, but when you use the function, you're paying a fee. Okay. If the feature is no, the feature is open. The feature is open. You don't have to pay in order to access the feature. Okay, it's only when you're using the service itself on the spot when you're covering a position, but you don't have to do anything special to allow the service. Cameron, if this was your question. Great. No, this is free content. It's free content. Like I said, only when you're using the fee. Look, when I unmark, do I still pay anything? No, right? Yeah, very simple. Okay. All right. Let's carry on with ease. I think, again, this is, guys, only on the WebTrader or on the AvaGo. You can't see it on the MT4 and MT5. Okay. Now, the second thing that I'm going to show you will be I'm actually going to show you 2 things. One is the news. Okay, as you can see here, the news section is from the Trading Central. As you can see here, it's divided to different categories. So we have, right now we're looking at the general. Okay, now it's more Forex, stocks, commodities, indices, cryptos. Okay, and each of those articles, at the bottom of the article, you have here they're all showing us just one instrument. You see, this article as an example already have 2 pairs. So I can analyze not only Aussie USD or Euro USD, sorry, not just one pair, not just what I'm reading here. I can analyze 2 pairs because it's a comparison. As you can see, this is the pre-European market brief. The Australian inflation rate climbed to 3.6 versus a slowdown to 3.3 expected. So this is higher than expected. Okay, the inflation rate is okay. I don't want to get into that, but the bottom line here is that reading this is not only one asset to analyze. This could be a very good bit for fundamental analysis. Look just how much information we have here. That's crazy. Okay, so this is one, and again, I can refresh, and it's very easy to maneuver here. Okay, the second thing that I wanted to show you to find an asset to trade would be the market buzz. The market buzz is under discovery. See, there's a globe-y icon here. We had the news, and that's right underneath. And in here, you can see NVIDIA was very interesting. US Beaver is very interesting. Apple is very interesting. What else? Okay, it's a little smaller here. And all kind of things. Okay, so you can let's see. You can also zoom in and zoom out. Very interesting. Okay, guys. So I think this is what I wanted to show you on the first part. Usually I could cover the signals and the calendar, but I really want to get to the practical part to give you something special today, guys. And we can, I think, peacefully begin the second segment. And for that, we are going to find a very decent asset to analyze. Let's see. Oh, right, my wheel doesn't work. Very unfortunate. Okay, let's go with commodities, and let's go with, okay. Just a second, guys. Actually, let's go with platinum. Let's see how it looks like. Okay. Okay, guys. Just want to pick something that will be as educational as possible, right? Okay. Okay. All right. I think we're going to stay with platinum. Platinum looks quite well, I'd say. And we are going to have a nice guide through about the toolbar above the chart. Don't you worry, guys. I'm going to show you exactly how I got into all those nice things. Okay. All right. So the first thing that we can see next to the sell and the buy, actually, I want to put it here. Okay, the first thing that we're gonna find here is on the left-hand side, we have the name of the asset. You guys saw that I was searching manually, but I could just as much be on Cocoa. And for instance, if I would want platinum in particular, I can just put down platinum. You see, I clicked on it, and I put down platinum. I pick it from the list. You see, it saved my things. Okay. If I keep going to the right, we have the time frames here, which you saw me bouncing with. So we have the minutes, hours, days, weeks, and months. In here, we can change the chart to a line if we want, or bars if we want. Okay. So you guys know, I used to show this a lot before, that there are certain things that disappear when you don't have the candles, right? Let me put perhaps an oval. Yeah, gonna do it this way. See those tiny tails, which assist us indicate support and resistance. When you put down the lines instead of a candle, I want you to see what happens to them, right? See those edges coming from the candles? You see that? You see all those tails, right? That as well. Now, what are those things? Those tails, what exactly are those tails? First of all, they are a significant part of the candle. Okay, the candle is not just green or red. Okay, watch what happens to those areas. Okay, I'm just gonna quickly do that. Yeah, are they still here, guys? The lines, the thin lines? Did anybody understand what I did? Look, this is with the candles, and this is with the line. Okay, is that understood, guys? Now, why is that important for me to know those levels? Exactly from the reason that I have put those lines, right, for analysis. Now, I could do this, okay, clear drawing, and then it throws everything away, but I want to keep the rest of the sheets. So unfortunately, I'm going to get rid of it manually. Let's go back to the candles. In here, I can enable the crosshair. So I'm going to go from no crosshair to crosshair. And then when I hover on the candles, I do get information. You see, now I don't get anything. There is nothing from the chart. Yeah. And if I change from no crosshair to crosshair, then I do get information from the chart. Okay. Again, super simple. Now, because we're looking at weeks, we're going to find out that each, you see the rectangle in here? So we have 13th, 6th, 29th, 22nd, 15, and so on. If it would have been days. So the days, we have, you can see, 17th, then we have the weekend, okay? 22nd, 23rd, 24th, okay? Let's go back to weeks. Okay. Now, when we okay, so let's finish up the guide through, and then okay, if I keep going to the right, we have here the different layouts, and here it's split it to two. In here, okay, we can split it maybe above and below, okay, the way that you prefer to analyze. If I keep going to the right, we have here the indicators. We're going to apply an indicator anyway, so we're going to get to that. And in here, I got all these interesting things that I want. Okay, for instance, I am just a second. We're going to move that down a bit. Even though, oh, that makes more sense. All right. Now, when we are looking at a picture like that, we should acknowledge that I better look at different time frames to have an understanding about the situation here. Okay, I'll explain to you in a minute why. But first, let's open the, as we said, the sidebar here, so we can. Okay, let's just get rid of. Okay, yeah, let's put that to the minimum. Now, let's first clean what we have here. So this is platinum. Okay, we're gonna begin from the basics. Okay, now, who think that platinum is gonna go up, and who think that platinum is gonna go down? Give me your votes, guys. Who thinks platinum is it going up or down? What do you think? Okay, so Steve, we have one thinking it will go up. Okay, Steven, up a little bit. Who thinks it will go down? Sharon, and it might go up and then go down. Okay, that's interesting. So we're not talking about one direction. We're talking about two now. It's my idea for a while. Okay. So we have few things here. We have few analysis from Steve, Steven, Clara, and Matthew. And now we're looking at a very interesting picture. As you can see, 2 weeks ago, Platinum reached 1098. This is that line, which I've marked, 1098. Okay, this is 2 weeks ago. Okay, and I might think that now it's going to stay between that range. So we're going to take that down a bit. Okay, between 1001 to roughly 1098. Let's see if we can get a. No, it didn't get there. Okay, 198. Now, the reason that I think that it might be there is because this is roughly the this was the previous resistance. Okay, I think maybe there are too many lines and it might confuse you guys. So let's stick with only. Okay, right. So there is this line which is passed. Okay, as you can see, 3 weeks ago it passed. Okay, roughly, well, that's 2 weeks ago, I'd say. It passed 1021. And then this is the resistance that it also broke at the same week, which is 1030. Now, this whole area here, okay, we have higher than that. But it's a year ago, so it's irrelevant right now, unless something fundamental will take effect. Again, we'll get to that, but right now we're just understanding what's happening here. So this area here, okay, is an area that it's already passed. It passed here and it passed here. You see? Okay, passed that as well. And now it reached a new level. So if it would have gotten lower than that, I could have a reason to think it might go down. But still, there is nothing significant enough to make me think it will go up. Okay, so let's suppose that let's just say it has potential to go up and then down. Okay, let's go with what the audience say, and let's suppose that we are going for a buy. Okay, now, do we guys have any estimation how far it can possibly go? Okay, if I think that this is a buy, now I'm going to hit the buy button. Will I know anything that's going to happen from now on? So, in other words, what I'm asking you guys, let me just show you here. How frequent, and what I did is I changed 2 minutes, okay, just to show you that each candle here, you see there is a new candle being born now. You see, all candles here are minutes candle. In other words, when I'm saying I'm going for a buy, you see that it used to be a buy. Just 10 seconds ago, it used to be a buy, but it changed. See, now it became a buy again. In other words, what I'm telling you guys, the direction itself, if I'm going to click here buy, it's going to go slightly up. It doesn't make me, of course, I'm going to make profit, but it's not necessarily the profit that I'm looking for. Okay, it might go up this way and then it goes down, God knows how far down. So I need to know how far up or how far down it can possibly go in order for me to capture the length that I need to make profits with. Again, I'm going to repeat that. Okay, when I'm buying something or selling something, depending on how many units I have and depending on the length between my entry to the goal, I'm going to make or lose money. In other words, this is a dollar difference, okay? And that means that I'm not sure that I can even place that because of the spread, okay? So let's push it a little higher. Let's change it to one hour just to show you guys. Okay? If it goes up $5 to here, okay, again, this is the spread. This is the difference between the bid and the ask. Let me try and be as precise as I can. You see, I'm gonna make $5. So if it goes a little up and then down, it doesn't give me anything. It's futile. What I actually need is a number to aim for. Okay, and then I can say, okay, right now platinum is sitting at 1058, and I think potentially it could get to here, or it could get to here. And then I know, okay, I can close it this way. Let's see how much we can make. $32. Okay, it doesn't, again, it doesn't, I didn't establish a strategy here, but it's just a first step to understand the scenarios. Okay, now with this understanding that only buy doesn't mean anything, I need to know buy to here or buy to where, what's going on, or maybe from a different price. Okay, that's the first step. The second step is, what are the possibilities? I can make 32 if it gets to here. Okay, but how much money am I using to do this? Maybe I'm using too much. Maybe I'm using very little and I can take a bigger position. Okay, what can also be the potential loss? How can I know the potential loss? Okay, I have here the stop loss that helps me simulate, but still doesn't solve, this doesn't solve the scenario that I'm up against. Okay, now we're going to write down 4 elements that helps us understand a bit better what can be the scenario, what can we make and what can we lose, and how much money we're using, and so on. Okay, hopefully this way we can construct a position with sense and we can have settings that we like. I want to tell you guys that this part with the preparations, okay, sometimes helps you determine whether to take a position or not, because a good trader needs to know when to trade, and a professional trader needs also to know when not to trade. Okay, right. The first thing we're going to write down is our target, because obviously when I have a target in mind, and I know, okay, I plan to make, let's say, $50, and it gets to here. Okay, so if I'm planning to make 50, we said, okay, and it gets to here. So I can simply close the position. Yeah, I have a target. If it reached my target, what can I do? I can just close the position, as simple as it gets. The second thing that I'm going to write down, guys, is the time length. Why? Because if my target, as an example, is 50, okay, per hour, that's not bad, right? I'm trading 5 hours a day. I make into 50 a day. That comes down to 250 a day times 24 days that I can trade, $6,000. Not bad. What if my 50 is per day? Is that still good? Not bad. Not bad, right? What if it's per month? Oh, that's bad. Not necessarily enough for groceries, right? So the time length giving a different impact, the same number that we have as target. Okay, so I need to think of a target with a good number, and also that it's worth my time. Same reason I'm not going to work for $1. Okay, so let's set the target, which I think can be reasonably, let's say $700. It's somewhere in the middle. We usually take 500 or 1,000, but 700 seems reasonable. Okay, so 700, and let's make it per week. Okay, we're going to change the, okay, we're already on week. Usually the advisable thing to do is to hover between different time frames, as I have explained to you before. Just going to do some checking here to see. Okay, this is what I've showed you before. You see, this is the previous segment. that we can understand it already passed it, already passed the previous resistance as well, and that looks pretty good. Okay, we're gonna go back to weeks. Perhaps we'll bring back the chart to its original shape. Okay, and now we're gonna change, we're gonna keep it as weeks for now. And then we can move to the third ingredient, which is our movements. As we said, just buying or selling without specifying how far up or how far down doesn't give us anything because of the frequency, because of how often platinum, look what happened. Look, this is just, you remember where it's been? Look, I've started my explanation when it was here, right? When it was here. Look what happened in the meantime. Look what happened in the meantime, and look what happened now. So this is exactly what I've explained. If I would take a buy here, here, or here, I see that it started declining, and you have to agree with me that there is a possibility it will go even further down. Okay, so I must have an estimation, possibly how far up or how far down it can go. And this is what we call the movements, okay, or the price difference. Now, how can we possibly estimate how far up or how far down platinum can go? The first thing that we can do is obviously manual check. Manual check means that I'm going to take the previous candle, which is 20 to the, which is last week, okay? And what I'm going to do is I'm going to put here the specifications, open, close, high and lows. We're going to leave a blank row. Okay, and we're simply going to put the mathematics here, 1059.9, 1037.8. This is, again, I'm getting it from the rectangle to the upper left. Yeah, don't do anything complicated. High is 1068.5, low is 1021.5. Okay. Now what I'm gonna do is very, very simple. I'm simply gonna subtract. Let me get what's after the decimal as well. I'm just gonna subtract the open from the close and the high from the lows. So for that we have 22.1. For the other one we have 1068.5 minus 1021.5. Okay. Now, what exactly did I just measure? What I measured is this guy. Okay, as you can see, we have high and low, and we have open and close. Okay, how did I know? Because that's what's written here. It's very simple, right? 10 is 1059. It's here. It's where it started. Let me see if I can somehow. You see, very, very simple. No, you can't see that. Never mind. You understand the idea. So we have two segments. We have the colored area, which is red. We have the thin lines, which are the bottom and the top and the bottom. Okay, and this is manual check, and I can say, listen, platinum has moved. 21.1 is what's in here in the middle, and 47 is the whole length from bottom to top. Now, if I combine both intervals, I have an average. There is really no need to do that. There is really no need to do that because I have an indicator to show you guys that will help you calculate several candles rather than just one in manual check, okay? Now, let's apply the average true range. We're going to click here on indicators. We're going to click here AVE, and then we're going to click on the average true range and drag it to the right. And let's just review what's happening here. So we have wielders, which, as I have explained, the wielders are basically the differences, as I have showed you, right, between open, close, high, and lows. And we have the length, which is how many candles are there. Okay, how many candles are being summed, okay, in here. So if it's 14, it's going to acknowledge, obviously, the time frame that we're analyzing. So if it's 14 weeks, it will be 14 weeks. If it's days, it will be 14 days, and so on. Okay, same apply with minutes and hours. Okay, let's make it mustard. Let's stay with, this is a bit too far. Let's make it 10. Okay, I think 2.5 months, it's quite enough. 50, because I don't want to go too far because things has changed, right? You see that those candles are bigger than that candles, and those candles are bigger than that candles. Therefore, I'm taking something in the middle. You see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's roughly here, right? And it also matches the time. Now, when I'm looking at the ATR, we have here ATR equals 55. Okay. And what I'm also adding here is PAM, which stands for potential average movement. And that means that I don't have to take the 55 to its full extent, the ATR. I'm just going to take some of it. Okay. That means that instead of going for the 55, which is roughly here, okay, here somewhere, let's do it with a calculator. Shouldn't be lazy. Okay. And then I can understand, listen, if I go this far, I understand that this is even farther than 2 weeks ago, which is the resistance. And if I have no understanding about anything fundamental around the corner, we actually have the non-farming payroll next week. But it's off topic. Okay, never mind. I don't want to confuse you with fundamental analysis. Let's stay as it is. So what I can do is, if I understand that 55 is above the resistance and I don't really like that, is I can put it a little lower, okay, this way perhaps. And this way makes a bit more sense. See, what I don't want to happen, okay, guys, what I don't want to happen is I don't want to place my take profit in a position that it reverses before that. I want to pick a number that is good for me to trigger the take profit. Remember that the take profit is a pending order that that activates automatically. Okay, so I'm gonna take half of the ATR, even less than that, as a precaution to hopefully trigger my take profit. Okay, so from 55 we took it to 25. Okay, and the last ingredient, which is units, is how many units we need to make 700 with 25. Just gonna quickly make it this way, then it's easier to calculate. Okay, and the units. Now, how do we get to the units? We have an equation for that. We're gonna go target divided by movements equals units, or 750 divided by 25 is how much, guys? Who knows? Let's do it together. Very good. Whoever wrote down 30 has got the right answer. Now let's validate this with the platform. Okay, we're gonna also go $25 down with the same length to compare the stop loss. Let's watch it together. let's see, 1061 minus 25, that's 1036. 1036. Okay. All right. Let's change the units here to 30. Right. It was 30. Yeah. Let's see. 30. And yeah, that's kind of perfect. Okay. If I want to be exactly at 1061 when I'm buying, I can use another pending order, which is called execute when price hits. And I don't have to settle on the price that I have right now. I can say, okay, 1061 and a half is exactly where I want to buy or sell. And then when I put it this way for execute when price hits, it's going to place a pending buy or a pending sell, and it's going to launch it as soon as it gets to the price. Okay, and I have all the numbers as I want with nothing. Oh, sorry, I set up a little. Oh, 36, right? Look at the numbers again. 25. Yeah. Yeah, okay. Do we have any questions, guys? There was something that wasn't understood. Is there anything that doesn't make sense? Please share it with me. Why not setting a stop loss to a higher, better gain loss ratio? Yeah, I'm going to speak about the ratio right now, Stephen. Thank you for putting it out. But before that, I just want to confirm with you guys the concept here with the margin and the leverage, okay? Just to understand how it works. And then I'm going to get to the ROR, the risk reward ratio, like Stephen brought up. Okay, so we have something called price per unit, which is the price that we see here. Okay, 1061 and a half. And we have that times 30. Okay, equals value. Okay, which is 31,902. Again, you absolutely don't have to know that by heart. I'm just showing you this to understand the logic of what's happening here. Now, there is a leverage. The leverage is 1 to 10. Okay, multiplies buying and selling. And that means that I can simply divide my value by the leverage. Divide the value by the leverage to have the margin impact. Okay, necessary amount to open the position. We used to call it margin requirement. Margin impact. Okay, 3,188. How did I know? Because I simply took the decimal out. And that's super, super simple, guys. This is super, super simple. The platform even does that for you. Okay, so we have this times that equals value, and we have value divided by leverage equals margin impact. Okay, how is that? How is that? Because we said that we are multiplied by 10. Yeah, we understand that? So if we are multiplied by 10, we can just divide that by 10, and then we know we need 10% 10% margin. Okay, it's written here. I could have showed you that, but it's gonna reset the whole package here. Okay, never mind. No, I first want to explain about the ratio, and then I'll do that. Okay, so what Stephen brought up is very, very important. Okay, there is something called R&R. It's part of risk money management as well. Risk reward ratio. Okay, and that's potential profit versus potential loss comparison. Okay, that means Take profit $1,000 plus, and we have stop loss leading us to, God forbid. Oh, sorry, we are on 700. My bad, guys, my bad. Okay, and we have that is a loss. However, if I compare it with my balance is 10,000 in the simulator account. Okay. Which means this is 7.5% of my balance. Now, how do I adjust my 7.5 to, let's say 2.5%? Okay, who has an idea? How can I flex I nearly gave you the answer. How can I adjust my potential loss from 750 to 250? What must I do in order to do that, guys? Let me just help you a bit, just to understand the numbers here. Sorry, I should have taken it from here. So this is our take profit, and that's our stop loss. Okay, very good, very, very good. And right now we're looking at, okay, put a higher stop loss maybe. Oh, there we go. Steven, you're on fire. Okay, so let's try first the other option. One of my options is to reduce the lot size, and I have lower impact, but I want you to see what happened with my potential profit as well. Okay, because if I minimize my lot size, my profit will have an impact as well. Okay, this is something that we don't want. We want to keep it as it is. Okay, and therefore my other options is simply put a higher loss. Sorry, a higher stop loss, which can be potentially at. Okay, what was the 36? Oh, sorry. Should have been here. Maybe even lower, higher than that. Let's make it 55. Okay, roughly 330 that we have. Okay, but this is how you can do it. If you want to do it a bit more precisely, you can go like this, and then you get to 250 that we wanted. Okay, roughly 250. Again, we're not going to be picky about that, but we were able to adjust 7.5 to 2.5 successfully. Okay, I'm just going to tell you something about doing this exercise. When you are pushing your stop loss closer to your entry, do it with cautious, because if your stop loss is too close to the entry, what can happen is it might trigger it, and then it will go to where you want it. So do it carefully and do a good risk money management. With this preparations, I hope that you have a much better overview about the concept, and you're able to utilize much more efficiently when composing a position with more sense. So guys, unfortunately, our time for today is up, but I'm very happy I was able to cover those practical things in order for you to have it in your toolbox. So I wish you all a profitable week. It's been a pleasure. Best of luck with trading, and have a good day.